Picture this. The cost of goods and services have risen, but you live off a fixed income. And you're not due for a raise until maybe the next time you find a job or the next 2 years. Talk about not getting a break. But sadly, most of us actually do live off of a fixed income or a fixed hourly wage. If this fits your situation, your income is either diminishing or shrinking, and that's not a good position to be in. If you want to learn on how to avoid not being in this situation or waiting for a raise, well, in this video, I'm going to show you how to earn and not burn money in 2022. All right, so 2021 has came and gone for all of us. Uncle Sam has written his checks and paid us and bailed us out. Now, the consequence about this is we get inflation. Now, the price of goods and services have risen on an average of 3.91% from 1971 to 2021. Inflation now is like 9%. Yikes. Well, the problem is that if you live off of a fixed income or fixed hourly wage, you're essentially not gonna get a raise from your employer until it's time to either ask for a raise or just to simply get another job. But typically, wages are the last thing to increase once a company has actually became more profitable throughout the year. So this actually means that goods and services that you purchase are now costing a lot more than they did last year. Now, your spending power is either gonna diminish or decrease, and you'll actually notice this too. It's gonna be pretty weird. All right, so there's 5 solutions that actually show you and help you to hedge inflation by investing your money in either one or all of these type of investments. Number 1, investing in rental properties, my favorite. The reason why it's number 1 too. Real estate prices have increased a return of 9.2% annually. That means your wealth would essentially increase over time and pay off the loan faster if you pour more money back into the loan. All right, you'll acquire monthly cash flow. Now, if done right, you can actually do anywhere between 8 to 12% on average. But if you really know what the hell you're doing and you've done your research, you fall into a great market or have a great strategy, you can essentially make a cash return on over 35% on your investment. You cannot beat that. Now, the tenants will essentially pay off your loan, which will create more money that will work for you, not you working for your money, and you just be in a better financial situation. Not only that, but your expenses will be tax deductible. So you can now essentially structure a way where you can not pay that much money in taxes to Uncle Sam. Also, you can eventually leverage one property to either improve on that property or use that money for other deals. Now, number 2 is house flipping. Now, house flipping is actually similar to like day trading in this approach, where you really have to know what you're doing, right? So your experience has to be considered, your knowledge in real estate and valuation, marketing, understanding how to renovate properties. All these things take into effect, so you're not going to be losing your money. Now, this is also great because, you know, when you're doing these type of investments, your capital is actually tied up in a shorter amount of period. Now, you can also get your money back pretty fairly, anywhere between 30 to 160 days or more, depending on the condition of the property and your skill set and the amount of time that you have. So, on average, your rate of return is anywhere between 35 to 50%, depending on your skill set. That leaves us with number 3 is real estate investment groups. Now, real estate investment groups are a collection of multiple partners who focus their business on building and buying apartment units and condo units. These real estate investment trust groups can be structured in a way where most investment groups are considered a partnership, or which they file for a K-1 report, all that tax stuff that we all barely don't know, but you need to know.
You're goddamn right.
And then the best way about this is the investment groups actually pull all their money together, and you can put as little as $500 down essentially. And your rate of return is anywhere between 5 to 10% annually, depending on how you have it structured. Now, if you like this video, check this video out here to learn more tips on how to invest your money. All right, so that leaves us with number 4, real estate investment trust, aka REITs. Now, REITs are actually similar to the real estate investment group, but where they purchase, develop, sell, manage real estate. All right, so these trusts are traded on the top broker exchanges like Robinhood or Webull or Ameritrade. Robinhood. You say Robinhood? Yuck. I'm playing. Don't sue me for Robinhood, please. I just started out with this YouTube channel. No, I'm not gonna say that. Don't do that. Now, REITs don't require a substantial down payment. You can buy it, at a minimum of 1 share if you want, or a fraction if you find one. But you can get a rate of return anywhere between 0.25% and 6.9%. Now that leaves us with number 5, which is a cool one, I think, but takes a little bit more research. And that is online real estate platforms. Now, you can invest your money in these projects on real estate crowdfunding, and they essentially would have calls where they would need your money to invest, and they pay either dividends or equity, and there's not really a huge down payment that is required. The rate of return is anywhere between 2% and 20%, so it can vary depending on the project, but it'll be a great opportunity. Now, if you like any of these tips that I've given you about how to earn and not burn in 2022, then make sure you go ahead and subscribe, click on the notification bell, wherever that is. And then also, feel free to comment below. Until next time, peace.